We have major breaking news right now. JP Morgan is officially predicting a recession in 2025 in this year because of Donald Trump's tariffs, because of how badly the market is reacting. The Dow Jones dropped 2,000 points today. Folks, that's only happened 4 times in American history. The S&P 500 lost more than $5 trillion worth of value. Investors are nervous, investors are scared, and they're conducting mass sell-offs right now in the stock market. And JP Morgan, one of the largest banks on Wall Street, is now predicting that the United States will enter a recession this year. Now, what that means for you, that means that there will be layoffs at jobs. That means that the hiring market will slow down. That means things will cost more when you go to the grocery store, when you go to buy electronics, when you go to buy a vehicle. We're not there just yet, but we're very close. And it looks like we're going to get there. I'll provide you updates every step of the way. I'll do a full breakdown on my Substack, linked in my bio at the top of the link tree. So please go check that out and follow along for all the news you need to know about.
Financial markets today roiled by Donald Trump and the chaos he has unleashed on the American economy. The Dow is down more than 2%, around 900 points today, after Trump, in an interview on Fox News, refused to rule out a recession. Watch those comments.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time. But I think it should be great for us. I mean, I think it should be great.
Should be great. Markets didn't think so, clearly disagreeing with that. Spooked by what Trump called there a, quote, period of transition. All major stock indices are now below the levels they were when Donald Trump was inaugurated. That may be one reason why in that Fox interview, Trump said this, quote, "You can't really watch the stock market," end quote. A sudden about face from the kinds of things he said during his first term, when markets were his most favorite metric. Today's sell-off and investor concerns are focused around one thing, that Trump's policies, which often come with sudden and surprising reversals, is sending the economy into a recession. New York Times reports this, quote, "President Trump inherited an economy that was, by most conventional measures, firing on all cylinders. Wages, consumer spending, corporate profits were rising. Unemployment was low. The inflation rate, though higher than normal, was falling. Just weeks into Trump's term, the outlook is gloomier. The sudden deterioration in the outlook is striking, especially because it is almost entirely a result of Trump's policies and the resulting uncertainty. Tariffs and the inevitable retaliation from trading partners will increase prices and slow down growth. Federal jobs cuts will push up unemployment and could lead government employees and contractors to pull back on spending while they wait to learn their fate. Deportations could drive up costs for industries like construction and hospitality that depend on immigrant labor.
Trump's economic problems are being measured in all sorts of ways, but we're not going to do more charts. I'm just going to show you what Vogue magazine calls a new haircut, recession blonde, coloring that needs fewer trips to the salon because people are trying to save in this Trump economy.
Word on the street is that recession blonde is about to become the economy's favorite hair color.
So how's the economy? Well, hasn't been good for a while, seems like my indicators tell me.
If you want to know how the economy's doing, just look at blondes. Like, this is recession blonde, honey.
You want to know a good indicator of the U.S. economy? These roots.
Listen to the people. That's what folks are sharing, and that could be anecdotal, but we're also seeing reporting about salon appointments crashing as people look for ways they can save money. A trip to the salon is one of the first purchases that tends to get cut when people see economic situations worsening or recession fears.
It doesn't mean a recession, but it does indicate that trouble may be coming. And the stock lost over 6.5%. This spooked investors yesterday. And you think about it, Walmart is considered a bellwether for the American consumer. And 90% of Americans live within 10 miles of a Walmart. They focus on low prices. They sell need-to-have items. They are the nation's largest grocer. If Walmart says, quote, "we are in an uncertain time," that is a potential red flag. And then you zoom out, you couple this with the retail sales numbers that we got for January. biggest drop we've seen in 2 years. And then the data that we're getting on how consumers feel about inflation, they think inflation is going to be about 4% within a year. And so Walmart's outlook reflects that potential pullback in spending.
So this is essentially looking forward, right? Because up until this point, Walmart's sales have been strong because of the pandemic, because of the leverage that they have with manufacturers in providing low prices to their customers. They're saying that with the economic environment and what the president is suggesting with the trade war, that could be bad.
Exactly. And you know, what I really thought was interesting is they highlighted that a lot of their growth is coming from consumers that make above $100,000. That's
not their core customer.
That is not their core customer. They said they're really tapping into a higher income customer. And in fact, in the third quarter of last year, 75% of the growth came from that group. That underscores that people of all income levels are looking for deals. They are struggling from that price pressure. But yes, it is potential pullback, inflation, and potential tariffs.
I want to apologize to all the Gen Zers out there who have been asking us millennials for some advice about how we got through the recession in 2008 and how we survived. Because back then, my rent was $500 and McDonald's actually still had a dollar menu. You could literally just walk into any store and ask for a job and they'd probably give you one. Now, the minimum wage was lifted in 2009 to $7.25, and it's still the same 16 years later. Now, housing was much more affordable, and you could get a used car with basically a song. Now, the $5 footlong was actually a foot long. Now, it's heartbreaking to tell you all in Gen Zers that you actually have it so much harder than we did. There is no comparison. We also didn't have social media influencers flaunting their wealth in front of us everywhere that they go to make us feel bad about the position that we're in. So I'm sorry, there's no comparison. You have it so much harder and so much worse. My only advice is to be as loud as possible, to share your experiences, and to vote for people who aren't worth more than $1 million.
I just did a post about how the Republicans and the conservatives, the wealthy ones, really want the economy to tank. And I thought I should answer why I know this. I work in commercial investing. My father worked in commercial investing. He came from wealthy West Coast money. So I grew up in this world of people being so excited for recessions. They were so excited. They talked about them like they were glory days. Do you remember that recession? Oh, I got so many commercial properties. Do you remember that one? I bought so many farms. They love it. It's like going to a thrift store where you're destroying the lives of people that you hate with every purchase. So they love it.
So for everyone who thinks Donald Trump plays three-dimensional chess, no, we now know he plays two-dimensional poker, and he's just folded. He folded on tariffs. He folded on the Fed chair, Jerome Powell. He's trying to reverse a series of his worst policies. But for those who think, and markets sometimes seem relieved that the worst is over, that he's actually backtracked enough, he hasn't. Many of the tariffs are still in place. Remember, they used to have 10% tariffs on most of the world, and U.S. average tariffs used to be 2.5%. So it's a massive increase. And then there are other tariffs. So there's lots of tariffs, lots of bad policy that's still in place. That's going to be a massive tax increase for most Americans, and that is going to cause the economy to slow down. There's more pain in our future.
If you're wondering why the Trump administration is trying to cause a recession, this is the main reason. It is because in 2025, $2.9 trillion of U.S. debt matured this year. In fact, 70% of it matures in the first half of 2025, giving the United States two options. We either pay this amount of money back or we refinance. And this is a lot of money. We want to refinance this. And a recession will have the byproduct of causing rates on bonds and rates at the Fed to most likely begin to fall, making it cheaper to refinance. And you really want cheap refinancing options with this amount of money. Starting a recession will also have the following effects, of which are also goals of Trump. One is to lower inflation. If you cause a recession, people have less money to spend, therefore there's less demand for goods, prices of assets go down. That's the same tactic of the Fed and the central bank as well. Also, decrease the price of oil. If less people have money to freely spend, people travel less, demand for oil goes down, price of oil goes down, interest rates go down. As we said, if you create a recession, this creates times of uncertainty. People dive into bonds. If people buy bonds, rates on bonds go down. And if there's a recession while inflation is going down, then the Fed is liable to cut rates at the US central bank and provide relief to the economy. Also, decreasing deficit spending. This is something that the Trump administration is doing, particularly with their Doge job cuts at the #1 employment area of the U.S. economy, which has been the federal jobs market, which is also tied to trying to decrease government inefficiency as well, because if times aren't good, even a government is spending less money. Now, maybe there are other paths to reach these same goals that do not hurt as many people. I'm not quite sure. I'm not a professional economist. I'm self-taught. There are some people out there who want to stitch this video and provide some other means that could achieve these goals in other ways that wouldn't cause a recession. Maybe they're just ideas. Feel free to do so.
There's a very real threat of food shortages. If you've been eating from your freezer and pantry for by 2025, listen, it's time to restock. We're staring down rising food prices with tariffs, ag workers being deported. Hearing this message from a prepper might not mean much to you, but I'm not the only one saying it. I only started prepping because of this. What got me started was these exact threats, this administration. So please just hear me out. If your shelves are getting low, don't get caught off guard. Your by 2025 eating from the pantry and freezer, it wasn't for nothing. You can use what you learned during your no-buy experience. Like, what did you actually rely on? What held up? What did you run out of too fast? You actually have a major advantage over other people who are going to be stocking up around the same time, even though you might have to buy more than them, because now you know exactly what you need to stock up on. But don't wait. This week and probably next is your window to restock. Prices are still manageable. Shelves are still full. This isn't panicking. This is planning. If you're not exactly sure where to start, I have a couple of videos on my page, especially check out the one about bulking your pantry. Time's short, but you're not too late, so don't put it off any longer. It's time to restock the shelves in the freezer.
Do you personally expect a recession?
I am going to defer to my economist at this point, but I think probably that's a likely outcome.
Yeah. Because markets, I mean, when you see a 2,000 point decline, it sort of feeds on itself, doesn't it? Because it makes you feel like you're losing money in your 401k, you're losing money in your pension. You got to cut back.
Yeah. I always remind people markets aren't always right, but sometimes they are right. And I think this time they are right because they're just pricing in uncertainty at the macro level and uncertainty at the micro level, at the actual company level. And then how it affects consumer sentiment, it's hard to tell. You know, consumers still have jobs. Wages are going up at the low end, which I think is a good thing. But if companies start cutting back, yeah, the consumer sentiment changes and business sentiment changes. You know, I think you've already seen business sentiment change a little bit.
I think it's more likely than not that we're going to have a recession. And in the context of a recession, we'll see an extra 2 million people be unemployed. We'll see losses in household income that are $5,000 a family or more. We're very likely in the context of a recession to see markets reach levels significantly below their current levels. This is an iatrogenic economic challenge. There is nothing in the outside world that is causing this challenge. It is induced by the words and deeds of President Trump and his administration. The good news about that is it could be resolved with words and deeds of President Trump. If they backed off these policy errors, I think there would be a substantial resumption of normality. But as long as a hospital maintains unsanitary conditions, its patients get infections when they enter, And as long as these policies are being pursued, we're going to see substantial volatility in markets, substantial recession risk, substantial damage to middle class.
To prepare for a recession, we are looking at increasing our emergency savings or saving that emergency fund if we haven't already by cutting our discretionary spending temporarily. The second thing we're doing is making sure we have a high yield savings account. That high yield savings account is not only going to bolster our savings, it's also going to allow us to diversify our income. Third thing is we're going to think strategically about our spending. We are cutting anything that is not actually giving us value to our lives. We are cutting our discretionary spending completely, temporarily, but completely if we don't have that emergency fund saved. And finally, paying off our debt, thinking strategically, especially about our credit card debt, using tools potentially like a personal loan, but eliminating that debt after our emergency fund is saved.
So this is crazy, guys. Legendary investor Ray Dalio said that America could be in store for something worse than a recession, essentially pretty much saying a Great Depression is on the horizon. Let's break this down. So Ray Dalio said he's worried about something worse than a recession if President Donald Trump does not properly handle tariffs and other economic policies. Dalio said, I think that right now we are at a decision-making point and very close to a recession, and I'm worried about something worse than a recession if this isn't handled well. He said we have a breaking down of the monetary order. We are having profound changes in our domestic order, and we're having profound changes in the world order. Such times are very much like the 1930s, which you guys probably know what happened back then. He said, I've studied history, and this repeats over and over again. And he also talked about U.S. debt, creditors, and he warned recently about what he said was the unsustainable growth of U.S. debt and creditors such as China holding too much of it, as well as the decline in U.S. manufacturing, leading to a reliance on other countries for necessary items. And Dalio essentially urged members of Congress to pledge to reduce the budget deficit by a few percentage points to 3% of the GDP, and he said if they don't, we're going to have a supply-demand problem for debt at the same time as we have these other problems, and the results of that will be worse than a normal recession. Maybe a Great Depression. Is that what he's hinting towards? What do you guys think? Follow along for more and join the free email newsletter in my bio.
Recession indicators that not enough people are talking about. The first one being people who used to spend a lot on luxury handbags going onto the little yellow app. I'm talking about influencers who are selling off their authentic Chanel and Hermes and buying DHG dupes to replace them. Also influencers who spend over 10,000 pounds on holidays in the Maldives, decking head to toe from DHG gear. No shit at all, because why wouldn't you go for the affordable and chic option? I guess quiet luxury just turned into dupe luxury. Number 2 is that second-hand luxury prices are tanking. I experienced this firsthand. I sold a Louis Vuitton keepall at the beginning of last year for over £1,000 to a well-known luxury consignment in London. And of course, they're not giving me that money for charitable purposes. I'm sure they're at least making £200 to £500 by selling it on. Let's say that the RRP they said is £1,200. And just yesterday, I saw the exact handbag sold on Vestiaire for £700. That is over 42% decrease in just 1 year. Bring me onto my third point, the increasing popularity of Vinted. The popularity of both Vinted and Depop is a recession indicator for sure. However, Vinted is known for selling products that are more affordable compared to Depop. As a result, Vinted reported almost $600 million in revenue in 2023, which is over 60% increase from the year before, while Depop was making a loss. And Vinted now have over 105 million registered users, and Depop only have around 35 million. Vinted pushing the high-end luxury category is also a very interesting move. Next, one that I personally love is the no buy / low buy / home improvement / decluttering / minimalism trend as a whole. Aspiring to that minimalistic lifestyle is becoming more and more popular because of the recession. And for the decluttering / home improvement part, people want to spend less money but make their environment better. That's why these videos are so popular. I also love making decluttering videos myself, so do check them out. Lastly, it's rich people moving out of London. By this, I mean influencers, people who make really good salary, etc., both online and in my real life, are getting priced out of London and leaving, buying elsewhere. If they're being priced out, what does that mean for the rest of us?
The threat of a looming recession is scary, but here are things I'm doing with my money to prepare. First, I'm making sure my emergency fund is in a good spot. This means 3 to 6 months of expenses, just in case layoffs or another unexpected event happens. Next, I'm practicing dollar cost averaging, which means I'm investing small amounts consistently every month instead of trying to time the market. I'm also avoiding panic selling. A lot of people see the market going down and it triggers a fight or flight response, and a lot of people want to sell off their investments to avoid further loss, even though that might not be the best move. The herd mentality kicks in, and when others sell, we feel pressured to do the same, even if it's not rational.
The sort of balance sheets of individual people are in better shape, way better shape than they were during, the global financial crisis. Part of the problem for an economy like Britain at the moment is that despite the fact that British consumers have savings, they're not spending because they lack the confidence to spend. That provides a bit of a cushion against, an extreme recession, but you can't rule it out. During the global financial crisis, it was possible to amass data and to make some predictions that were pretty well grounded, because so much of the uncertainty is about one individual, Donald Trump. It's the impossibility of making a rational forecast that is a nightmare for somebody like me, and it's a nightmare for businesses too.
What's done is done, and now we are where we are, and the question is, where do we go from here? And the market's answer very clearly is we don't go in this direction, that this is not going to be productive. It is simply going to hurt our economy. So let's take a look at a couple of those numbers. Let's start with the stock market yesterday. We talked about the almost 5% drop. This is actually $5 trillion of wealth lost since the inauguration. The stock market had already been starting to go down as people got more and more nervous about what Trump was or wasn't going to do. So a huge drop. But here's what's actually quite interesting. The stock market drop here was actually larger than the stock market drop in every other major index, every other major country. In Japan, it was down 2.8%. In Europe, it was down 2.6%. In the UK, just 1.6%, and in China, just 0.6%. So why is that? Trump thinks he's hurting all these people. He thinks everything is, a negotiation where somebody wins and somebody loses, and he thought he was the winner, and we turned out to be the loser. And the answer is because, based on a set of projections from the Budget Lab up in New Haven, we are the loser. The impact of this, the long-run impact on GDP of this, is actually going to be, projected anyway, to be worst on the U.S. of any other major country that we trade with, except for Canada. Canada has a special problem. They export a lot of oil to us. We are net oil exporters, but we do bring in some Canadian oil for complicated reasons I'll spare you. But essentially, they believe that we will have the worst economic impact. What actually could be positive in the UK, Trump's tariffs on the UK are only 10% among the lowest. The EU, a tenth of a percent, Mexico, a tenth, and so on. And China, only negative 0.2, because these countries have other things they can do. Their consumers are not going to be paying the cost of these tariffs because they're on the other side of it, and therefore they are actually going to have slightly better economies than they would have had. So the irony is we're the worst. And yes, in terms of that JP Morgan projection, I think we are definitely in the 60% recession odds for this year. This economy is going to soften materially.